Okay, good morning, everyone. This again is Kathleen Amonte at the Federal Home Loan Bank of Boston, and I'm happy to be providing you the training for the CDFI Advance program. Please note that the slides for this presentation are available to you under handouts. As I move through materials, if you have any questions, you can type it into the question box, or you can raise your hand if you prefer to ask the question, and we will answer your questions, whether right at the moment or we might wait till the end, but there will be time at the end for any questions that you may have. So we're going to go over today the program objectives, how to be eligible, how we're allocating the funds, the process, and as I mentioned, we will have time for questions. So for those of you that are not aware of the Federal Home Loan Bank or haven't done business with us in the past, we're here to support New England communities. We provide our members with reliable financing that unlocks credit and homeownership. We support smaller community lenders who otherwise would be limited in their ability to operate by focusing on the needs of our New England region. We do have a diverse membership of large and small regulated financial institutions whose business contributes to the affordable housing program and the other voluntary homeownership and economic development programs like the CDFI Advance. This program is a key tool to implementing our mission, and the bank developed this program for you, providing an opportunity for the members to support CDFIs in their important work throughout New England. This program was developed due to CDFI's lack of sufficient capital, and members need new tools to partner with them. So our CDFI Advance is low cost, flexible advance members can use to support the CDFIs. So through our research, we identified needs in our district and throughout the system with the FHLB Bank's forward-looking report, FHLBank System at 100. Through discussions with our members and CDFIs, it helped frame this program that has moved from a pilot in 2024 to a part of our permanent suite of programs here at the bank. As we completed the pilot phase, there's been a couple of updates to the program, and we'll be going over the updates for the 2026 round. So we're going to start with the program eligibility. Although there's no changes here, just for folks that are new to the program, members, you're going to need to obtain the following from the CDFI to be able to complete the application. So the CDFIs that are eligible for this program are non-depository New England-based CDFIs. Okay, so they will be certified in certain target market areas, such as you're seeing here on the screen. And your CDFI is going to provide to you what target markets that they are going to be focused on with the funding provided from the bank so that you can enter that information into the application. So the funding that they're going to receive through this advance must serve one targeted market as defined by the CDFI fund. So the details of the program. This program is advanced backed by subsidy commitment from the bank. So you'll be coming in and asking for a specific advance amount, and we'll be doing the subsidy calculation alongside that. So the advance can be a minimum of 100,000, and we do have tiered member CDFI and state caps. We'll go through some more details on that in the next slide. These are 0% interest to our members for 1 to 10 year on classic advances. So you can do any term you want between 1 to 10 years. Please note that you will be assigned a pot of subsidy at the time of the application, but when it comes time to disperse the funds, we will rate shock the award. So if rates have moved, if they have gone up, there's a possibility that if you would ask for $1 million, we may have to lower that a little bit if there's no additional subsidy available. So we just want you to be aware that you are given an allocation of subsidy at time of award, but due to rate changes, the principal amount may end up being shifted. And please note that funding is available on a first come, first served basis. In order to keep the funds low cost capital for the CDFIs, we have capped the member spread at 300 basis points. Now, although the application is open on our website for our members to access, the funding is not going to be released until Monday, March 16th at 9 a.m. So you can go in and pre-populate your applications now, but you're going to need to come in on March 16th to actually complete the submission of your application. We like to give the members a little bit of time to go in and make sure they have all the information that they need so that they're ready to move forward on the 16th. So here's the allocation information. As I previously mentioned, this is a first come, first served product, and that the online portal is already open for draft applications. The funding will be released at 9 a.m. on March 16th, and we have just slightly over $5.8 million in the pool for this year. Now, we do set tiered caps for our members and our CDFIs. So from March 16th to June 14th, members and CDFIs both have a cap of a $2 million advance. So a member can work with multiple CDFIs and a CDFI can work with multiple members, but they both have to stay within that $2 million cap. We've also set aside subsidy in state pools. This just allows every state to have an opportunity to secure some of these funds. On April 30th, we're going to lift those state pools. So any unallocated subsidy that's available in a state pool will be moved into the general pool for any member or CDFI to come and secure. On June 15th, if there's any subsidy still available, we will lift that cap and any member can come in and request above the $2 million. So the allocation by state, again, to facilitate some geographic distribution, we have set the subsidy reserves as followed. This is based on per capita. So Massachusetts will have 2 million subsidies set aside, Connecticut 1 million, and the balance of our New England states will have 500,000 in subsidy available. Now, again, these funds, if not used by those particular states, will be released to the for anyone to come in and use. So the application process. All of our applications are entered in our online community lending portal. So if you're interested in using it and you're a member on the line and you're not sure if you have credentials, this is the great opportunity to go in and see if you do, see if you can access the CDFI application. If you do not have credentials for our community lending portal, you can go right to our Federal Home Loan Bank of Boston website. On the upper right-hand corner, you'll see a green login box. If you click that, select community lending, and on the login screen, you'll see under the login information that there's a link for first-time users. So once you click that, you'll be able to set up your credentials. If you already have credentials and you're not seeing CDFI in your main menu on the left, just let us know so we can make sure that you have access. So funding is awarded in, it's a reservation only. Again, we have already stated that we will be rate shocking these and recalculating the subsidy at the time of disbursement. Disbursements of the CDFI advance are handled the same as a member would take down any advances here from the bank. They're going to be requested through the funding desk. Now, we are requesting that you call and draw down your advance within 60 days of your award. If there is something that's stopping you from doing it within the 60 days, but you are planning on proceeding with this, whether it's stuck on underwriting or any issues like that, just let me know and we can work on giving you an extension on the award. Once the funding is dispersed to the member, they have 30 days to pass it on to the CDFI. And once you've passed it on to the CDFI, we request that you go back into the community lending portal and upload the note, just so we have backup that you have matched fund, that if you ask for $1 million, you've given the $1 million to the CDFI, and we're validating that you're not charging them more than the 300 basis points. After that note is received, you're going to receive an email back from us with a spreadsheet attached. It's a very simple spreadsheet that you'll provide to the CDFI for them to report back to us on how the funds were used. The CDFIs have 180 days from disbursement to utilize the funds. Again, if the CDFI has something in their pipeline and the closing's been delayed, just call us. We can work on extensions. So I just wanted to give you a look at what the create a new application screen will look like. As you can see, it's going to show you the remaining CDFI available to the member. It's going to show you what's available in the overall pool, and then it's also going to demonstrate to you the state allocation. So when you log in, you'll see what's available, what you have left for your advanced principal. So all your information will be available to you on the Create a New Application screen. And we also just wanted to show you the subsidy calculation. So when you go in, you'll enter your advance amount, and then you're going to be looking up your rate. We use the CDA Extra Classic rate. So you'll be picking the rate based on the term in which you have selected for your CDFI. And that'll calculate the subsidy that's going to be put aside on your behalf. We also wanted to give you a little screenshot of how the funds have been used. This is just a snapshot from 2025. We approved over $26 million in advances with just under $7 million in subsidy, which funded 32 applications that was used through affordable housing, community facilities, and supporting small businesses. And overall, since the inception in 2024, we've supported just under $51 million in advances with $11.5 million in subsidy. And you can see how the funding has been used by the CDFIs throughout New England. So overall, the reports we're getting back and the impact we're seeing, this has been a powerful program for the CDFIs in our region. I also want to just take a moment to let you know that if you're interested in other programs provided by the bank, that the HCI team is going out on the road. Our in-state presentations start next week on Tuesday in Providence, followed the next week in Hartford, Connecticut. And every state will be going into, and this is an opportunity for you to actually meet staff that you could be working with face to face, hear about our other programs, and hear panelists discussing different issues and hot topics within your state. So if you're interested in hearing about any of our other programs or hearing our panelists speak, please go to the bank's website. At the bottom under events, if you click events, you'll see them all lined up there. So as I said, we are going out to each state, and we're starting in Providence, Rhode Island next week. So if you have any interest in attending, please go to the website and register. And that is actually the end of the webinar, and we are open to any questions you have. I know we went through it fast, but we just wanted to make sure we gave you the highlights of the program and the slight changes that were made. And again, remember the funding is going to be available on March 16th.
Kathleen, there is a question came in about the current rate. So if you want to just kind of go back over how the rates are calculated and the subsidy is calculated.
Sure. So I can't tell you the rate right now off the top of my head, but what happens is when you go into that subsidy calculation screen, you're going to enter your principal amount, and then there's a link you'll be able to click to get to our rates. So the rate is going to be the CDA extra rate for whichever term in which you are using. So from 1 to 10 years, we have obviously multiple rates within that time frame. So it'll be the rate that'll be used to calculate your subsidy will be the rate for that term on that day. And then we'll recalculate that rate at time of disbursement. And I also just want to put in here too, if we're talking about rates, again, the member can only add up to 300 basis points on the borrowings. Another thing to add too, if the CDFI is maybe borrowing more than what the CDFI advance is, you can blend rates. We just need to see that our funds were lent to them at 300 basis points.
All right, another one came in here. Could we hear from a CDFI that has participated in the program, concerned about potential charge-off and having to repay the loan from our own cash? So maybe to just kind of discuss or kind of go over like how the relationship works with the funding and
Yeah.
the flow of everything.
Right. So again, this is an advanced product that is being put out to our members at 0%. So they will need to underwrite the CDFI. The funds will be due at the end of the term. So it is important for the member to, be comfortable with the CDFI they're working with, as these are advances that will be paid back to the bank at the end of the term. And as members know, all advances that are taken through the Federal Home Loan Bank are collateralized. So that's another thing for members to keep in mind, that there will be collateral requirement on the advance.
Great, and there's a couple of questions about the state pools. I don't know if you want to just quickly zip back to the slide that shows the allocations and the timing for that, but also do you have a rough idea of what say 500,000 of subsidy will actually create for an advance?
I didn't do any calculations because it's such a wide range. It all going to depend. I mean, some members come in for 1-year money, some members come in for 10-year money, and that's going to change how far the subsidy goes. I will say last year we were seeing more 10-year advances going out, as in 2024 we started this program with just 5-year money, and we listened to our members in our CDFIs that they wanted a little bit more of a range. But as we saw on the slide with the funding, we are able to. So last year we did almost 27 million with just under 7 million in subsidy. But again, the terms were mostly 5 years and up.
Yeah, that makes sense. And of course, like if anybody has any specific questions about that, you can give Kathleen a call and kind of run through a couple scenarios if that'll help ahead of the application submission.
Oh yes, definitely happy to run run rates for you at the time and just give you an indication of how much that would support.
So kind of looking back at the question about repayments and things like that, does the member bank take individual loans as called?
The member bank is going to work with the CDFI. Some have deployed the funds to the CDFI, project to project, so that they're taking collateral back in that way. It really depends on what the CDFI is supporting, how they're deploying the funds, and if they have how their relationship is with the member. There's so many things that get involved in that on the member side that the bank does not dictate how it goes. So it's going to really be between the member and the CDFI, but I have seen the member hold the funds in escrow for them, and as they are deploying the funds, disperse out to the CDFI as they're taking back collateral from them.
And another one, given the 180-day time restriction, do you see applicants having more success if they have a project that's ready to fund, or can these funds also be used as a tool for future unknown projects or a loan fund type of thing?
We see these funds as enterprise level funding for the CDFI, so they may have a project in mind, or they may just be securing funding for things in their pipeline. So it's been across all different, having things ready to go, not having things ready to go. Through the first couple of years of the program, we've only taken back $11,000 in an advance. So the CDFIs have been very good about deploying these funds. There was one that they had come up on their 180 days. We gave them a little bit of a extension, and they weren't really sure if they're going to be able to deploy that last 11,000. So we did a prepayment. As these are 0% funds to our members, there's not going to be a prepayment penalty on it. But that's all that's ever been returned on any of the applications that we have funded. The CDFIs typically have a pretty good pipeline of projects and things they want to invest in. So it typically hasn't been an issue, but we can provide an extension, but it's on a case-by-case basis, and we would discuss that at the time.
Great. And so kind of and again, in the same vein of the funding pass-through and everything, I think there might be some confusion about the type of advance this is. So what's the typical repayments? The question is, what's the typical repayment structure between the bank and a CDFI? Do banks typically require amortizing to match the term of the advance? And if it's a 0% advance, do they charge the CDFI 3%?
So the member's going to be charging the CDFI their interests, and they'll be paying, the CDFI will be paying that interest on a monthly basis. But the advance back to the bank, the Federal Home Loan Bank of Boston, is a balloon payment at the end of the term. And there's obviously, as a 0% advance, there's no interest due from the member to the bank during that term.
Yeah, so it's not an amortizer. It's just just a classic. Let's see here. Are there limitations on what these funds strictly cannot be used for, or does it have to be in support of affordable housing?
No, it does not have to be in support of affordable housing. CDFIs are certified through the CDFI fund for different things. It can be community facilities. It can be supporting small businesses. As long as the CDFI is investing in projects that match up to what they are approved of through the CDFI fund, that is what the bank is using as eligibility criteria.
And kind of a follow-up to that, can we use these funds to refinance loans at our CDFI?
Yes. You're just going to have to show us what, the benefit of those funds being refinanced out. So if you have a borrower that had a high interest rate and this is actually going to improve or be able to help develop more housing or things, we just need to see that the benefit is going to the community, the CDFIs.
And then there's another one here. Can these funds be used with an SBA loan guarantee program?
Yes, you can use other funding sources too at the CDFI. All we ask for is that you report back to us how you deployed our funding. But yes, these funds can be blended with other programs.
And kind of in the same idea there, we do see that a lot for one of our closely related programs, the Jobs for New England program, that does pair directly with SBA to take out the members portion of that. So you can actually do a CDFI loan through J&E as well. And let's see here. There was one more that I saw. Yeah, can you just kind of go back to discuss the difference between the advance and the subsidy, the relationship for the two, and what the different, the pool is based on and what the caps are based on?
Yep. So the pool this year is just over $5.8 million. And so we look at each state per capita, and that's how we carved up the allocation by state. So as you can see, it's $5 million that is being carved up to the pool. There'll be additional 800,000 that'll be sitting in the general pool. We did this because Massachusetts has way more CDFIs than any other state, especially looking at a Vermont or Rhode Island. So this gives every state an opportunity to get the CDFI advance in their area. And then if a state hasn't fully used those funds, we're going to release them back into the general pool. so that anyone can grab them. We've done this. We did this last year and it worked really well. We did not have any states, I don't believe, run out of funding before we released the allocations. And again, if a state doesn't use it, it's going to be opened up to every other state to use. It's just kind of level setting the playing field so that every state has a chance to secure some of this funding. Again, as it's a first come, first serve, if you have a state that has many CDFIs, they're going to be able to access the funds quicker. So we just want to make sure that we're serving our entire region. And again, the subsidy will be calculated based on the term and the principal that you're taking. So how quick the funding goes is going to depend on how quick members are coming in to secure it and how long the terms are that they're taking.
And a big thing too on that part is looking at the difference between the advance and the subsidy. The advance is the amount of the loan that the member is taking from the home loan bank and passing through to the CDFI. The subsidy, which is how the pool is set, is what we're using as our internal calculation to buy down that CDA extra rate to zero. So the subsidy never gets credited out to the member. The member sees the benefit of the subsidy in the form of that 0% cost of funds. Let's see, a couple more questions just popped up. So we're a Mass-based CDFI, but we lend nationally. Can we use the funds nationally, or should the projects be located within the Northeast states listed?
Great question. And the answer is this funding is for New England states only. The funds have to be deployed within our 6 New England states. If you work in Massachusetts and you have projects in any of the other New England states, that's fine. But the funding cannot leave the New England region. And that's why it's only open to our members could, have a footprint in other states, but the CDFI also has to be based in New England. So we're keeping the funding strictly here in our New England region.
And the allocation by state, that's based on the location of the CDFI, correct?
Correct.
And here's another one. My credit union is not yet a CDFI. Could we still apply for the advance?
The credit union can apply for a CDFI advance for a CDFI that's been certified by the CDFI fund. And remember, these are non-depository certified CDFIs. I think that's an important distinction to remember. They cannot be a depository institution to be able to utilize the funds. Member can take it down on behalf of another CDFI, but again, those are the eligibility criteria.
Yeah, so if the credit union has a CDFI, that would be ineligible, but the credit union could pass it to a certified non-depository CDFI and act as in that member role.
Yes.
All right, I don't see any other questions. I think we've gotten through quite a few here. Anyone else out there?
Please know that if you think of something after you've left this presentation, don't hesitate to give me a call, send me an email. I'm happy to walk through any scenarios we may want to discuss, but we're here to help and to answer your questions, so don't hesitate to reach out.
Oh, one question just popped up. Oh, here we go, good one. Is there any thought to allowing CDFIs to create revolving loan funds versus one-time funding?
We are not contemplating on the bank side. However, if you have the funds for 10 years, feel free to keep revolving those funds. We want to see you, deploy them, get paid back, deploy them again. It's just that there is the balloon payment at the end. But for now, no, the program is going to just be the advance due at the end of a term, but we do hope that the CDFIs are able to revolve these funds as they continue to move forward.
And let's see, can the bank relend funds returned by the CDFI through P&I payments?
I'm sorry, Mike, can you say that one more time?
So the question was, can the bank relend funds returned by the CDFI through P&I payments? So I think there might just be a little misunderstanding on how the setup typically works for these.
Yeah, so our classic advances do not have monthly principal payments. it's the member is most likely going to be charging you a monthly interest charge based on their spread to you, but there won't be a principal payment until the end, a balloon payment at the end for the full principal amount. We've seen members hold funding back until a CDFI is able to deploy them, but you're not going to be paying the funds back to the member other than interest payments until the end of the term.
And then
So
when
that you can
those,
hold
yeah,
those funds and keep using them and keep them out in the community.
and when those payments do, when the balloon payments come back to the member has to immediately pass them back to us.
Correct.
Because that backing loan, which the loan to the CDFI is no longer in place.
Yes, exactly. That you're going to owe the member at the end of that term, and the member is going to owe us at the end of that term.
And just kind of following up on setting up a revolving loan fund. Obviously, there is an issue with payments ballooning at the end and kind of being hit with that. Do you want to kind of talk a little bit about how CDFIs have created loan pools by blending various sources together?
Yeah, so we've seen CDFIs take our funding. I'm going to give you one of our biggest examples that we love to talk about up in Maine. We had 3 CDFIs secure funding from us here at the bank through various members, along with one of the members, Bangor Savings Bank, along with Bangor Housing Authority, and some other investors that pulled the money to allow residents to buy their mobile home park that was being put up for sale. So we've seen our funds get blended with other CDFIs that got funds from us and other funding streams for one project. So there's been some very creative ways of using this funding, because as the only parameters we have on it is that you stick to your CDFI target market area, and that's this is the type of activity we want to see out in the community. So we've seen CDFIs use SBA loans to help support some of their work that ends up getting blended with some of our funding. So it's pretty flexible, our funding, on how you use it, as long as you stay within the defined parameters in which you need to work anyway. So again, it depends on what you're working on, but we have seen our funding get blended with all sorts of different other funding sources, whether it be for one project or to support multiple different initiatives.
And on the revolving loan fund part too, a lot of CDFIs are looking to just add additional capital to an existing revolving loan fund, with the idea that hopefully in the future, they could essentially refi this and if you had a 5-year balloon or a 10-year balloon, refi that if this program is still out there. Or replace it with other discounted capital as it comes in, money in, money out, money in. And obviously too, we really don't want CDFIs to get in over their head. We have these high caps, looking at, potentially up to $2 million. But the minimum is 100,000. So if you're looking to start a revolving loan fund, but are kind of cautious about what the end of that 10-year or 5-year period, whatever it may be, when the money comes due, start small for sure, and see how it goes. You don't have to take the $2 million for sure.
Exactly. It's up to you on what you're planning on using it for and what you're comfortable with and how much you can get the member to underwrite you for. We do have CDFIs that are revolving loan funds that are using our financing. So it definitely does play well. But as Mike said, you need to be prepared for those flows of ins and outs and be prepared to pay this back at the end of the term.
And then one more here. Can you give a little bit more information on the reporting aspect on the use of funds and how often this occurs?
Sure. It's pretty light. It's a one-time report back. So There's 2 stages of the reporting. One is the member providing us the note to support the lending to the CDFI. And then the last is a very simple Excel spreadsheet that's going to be asking you, who the funds were loaned to, where they're located, and what the funds were used for. It's a very simple spreadsheet that we ask the CDFIs to complete within 180 days of disbursement, and then they provide it to the member who uploads it to our portal. That's the end of the reporting requirement for this program. Again, and if you can't quite get the funds deployed in the 180 days, you have a deal, that's working through the process, call us, have the member call us. We can work through extending that time frame if needed.
And a great addition too, that if you are putting this into your own revolving loan fund, we're only looking at the initial lending. So if you borrow $1 million, we're looking to see that you deploy $1 million. But then as that money cycles back into the pool, you don't need to report on it.
Correct. Thank you. That's a very good distinction. Just the initial implementation of the funds, report back to us, and that's the end of your reporting to us here at the bank.
Right. I don't see any other questions. Oh, sorry. Just as I say that. Let's see. If a loan is approved and funded for a CDFI, when more funding becomes available, can the member apply for an increase in the financing, or would a separate facility be needed?
We do not have a way to increase a current award. It would be a separate award and a separate advance. We have not had a need for this. If this program continues to grow, it might be something we think about. I know the J&E program does allow for an increase, but this program is not set up to entertain that at this time. And again, please, if you think of something at any point during this program, don't hesitate to reach out.
We had quite a few great questions that came about today.
Yeah, I agree.
And I think we've reached the end of them.
Okay, well, thank you all for attending and for your attention. And again, if you're interested in coming out to our to meet us in person in your state, please go to the website and take a look at the forums that we're going to be holding throughout the New England district.
And just a quick one that popped up, wondering about longer repayment, like going beyond 10 years. Can we go, is somehow in the future, would we look at, potentially going as long as 15 or 20?
As anything's possible. We started this program with 5 years. We did survey our members and our CDFIs after that year, and we're told that going out to 10 would be beneficial. So we do constantly get feedback from our members and our CDFIs. So I'm not saying no, that it couldn't be available in the future, but for now it's limited to the 10 years, and it will always be classic advances because we want the CDFIs to have that funding for the full term. All right, well, I thank you all for your attention and your time, and I hope you have a great rest of your day.